going to go ahead and get started. So, as you guys know, coming into every trading week, we always start with the economic calendar. Today was a bank holiday, so you should not have done anything today. Now, there was something offered that we will get into, and I'm going to review it, just showing proof of concept. But on bank holidays, generally, you don't want to do anything, you just want to sit it out. The reasoning behind this is if you look at it from a logical standpoint, in order for us traders to make money, we need volatility in the markets. Volatility gets driven by large impact news drivers like these red folders right here and big players that come into the markets. So big institutions that put a lot of money into the markets, they drive volatility. If there's no volatility in the market, then how are we even going to make money? If the big people don't want to go in, then why should we want to go in? Looking at it from a logical standpoint, you shouldn't trade on days that have bank holidays. It's very low volatility and there's very limited opportunity. But tomorrow, we have 9 p.m. President Trump. That's one of those filler news events that doesn't really mean anything. It's coming out in Asia session. So this isn't really too important. I don't really care much about this. But in the morning session for Tuesday, because we mainly focus on the morning session, since it is the day after a bank holiday and there's no high impact news, we could see it be a little bit more trickier to navigate. And I don't know why I have Farming Simulator on my screen right now. But you could see it be a little bit more trickier to navigate. And the reasoning behind this is if you see a weekly cycle sequential SMT between Monday and Tuesday, it is lower probability because whenever you have a bank holiday, the day of the bank holiday and the day after are considered one daily candle. Now, this is something that not many people have picked up on, but if you go back, well, really, if you look this week, you can see that Monday and Tuesday are coupled and they're doubled. If you look at it on a daily chart, you'll see that the current daily candle hasn't even closed yet, but Monday price action is still within there. So that's why days after bank holidays are considered lower probability, because it kind of throws off the sequence that we use, if that makes sense. But Wednesday, we have 2 p.m. FOMC meeting minutes. This could be a little bit trickier to navigate. As you guys know, this is one of those low probability news events. Now, does that mean there's going to be nothing to do at all? No. In the PM session, you guys already know if there's a TPD with narrative, and then within a TPD or reversion level, golden. But don't come into Wednesday PM session with too high of expectations. Thursday, we have 8:30 unemployment claims. This is a high probability news event, so Thursday we could see opportunity form in the morning session. This Thursday can be one of those clean days to really encapsulate majority of the week. And Friday we have 9:45 flash PMI. Again, Friday, that's where we could see our opportunity form for the week. So Thursday and Friday, we can expect that to be the high or low of the week. So now looking at the charts, as you guys already know, we've been bullish. We've been wanting to see bullish delivery. That's what we've gotten. We have S&P, the NASDAQ, and the Dow. We're looking at it on the daily time frame. And just to get a little sidetracked to what I was talking about earlier, as you can see, this daily candle right here doesn't close until what would be the Tuesday daily close, but this also encapsulates Monday's bank holiday price action. So that's why if you see a weekly cycle sequential SMT between Monday and Tuesday, it's kind of like a false SMT, if that makes sense. So this is Monday and Tuesday are considered one daily candle in this example, since Monday was the bank holiday. And you guys can hear me good, correct? Okay. But we do have these highs on S&P that we've been targeting, and then we have this high on NASDAQ, and the Dow we have this high. I don't expect the NASDAQ to reach its all-time high quite yet. I would like to see the NASDAQ or the S&P breach their all-time highs first, and then from there, if we get a short-term accumulation and then a bearish true reversal, then we could see a fall back within the range. But for now, really what we want to see, as you guys know, Thursday or Friday, if today or tomorrow, if that doesn't kick us up higher, then Thursday or Friday we could see that run higher, taking out these highs. But for right now, draw on liquidity is these highs. If we get a bullish entry signal, then these are the targets. So now we are looking at today's price action. And as you guys can see, there was a 1 hour TPD with the 6 a.m. candle. So the Dow, which I don't know why the text is so small. There we go. The Dow, as you can see, there was a cracking correlation between candle 1, candle 3, with the NASDAQ and the S&P. There was that cracking correlation. So this was a low probability TPD. As you can see, the Dow continued higher and higher and higher, while the NASDAQ and the S&P, well, the S&P kind of stayed consolidative, while the NASDAQ went down and offered bearishness. This is a telltale sign of low probability price action. Whenever you have the Dow trending one direction, you have either the NASDAQ or the S&P trending another direction, and then one of the other assets are just consolidating. So each asset within the triad is just doing its own thing. That is telltale sign of low probability price action. But using the logic of reversion levels and TPDs and knowing the proper asset to trade, you still could have, I'm not even going to say trade something off this, but tapered something off this, because we're not supposed to trade bank holidays. So we have that TPD right here, and the telltale sign that the NASDAQ was weaker is if we look at, if we look at this gap right here in comparison to the NASDAQ and the S&P. So now we'll just bring that to, there we go. You don't necessarily need, the TPD can tell you which asset is stronger or weaker, but by comparing gaps in price action and certain candles, you can gauge strength and weakness. So this TPD right here, this one formed, especially if you look at the opening price of candle 2, it formed below the midpoint of this gap. But if we look at the S&P, it formed above the gap, that opening price. So this right here is a way to gauge strength and weakness. As we can see, NASDAQ is stronger to the downside because the opening price of candle 2 is below the midpoint of this gap, while on the S&P, it's above the gap entirely. So choosing the correct asset, and this is something similar to last week with that 4-hour inversion fair value gap. As you guys know, there was a cracking correlation inside of that gap. This is another one of those things with comparing the opens and closes inside of gaps. So I'll say that one more time. This fair value gap formed at the exact same time on both of these assets. The S&P formed the TPD. The opening price of that candle was above this gap, while the NASDAQ opening price of this candle was below this gap. So there's a cracking correlation between the gaps. Now that doesn't give you necessarily the entry signal. That just tells you, okay, the NASDAQ is weaker, well not weaker, but stronger for downside movement. And if we see this TPD right here, if we look at this price action on the 15-minute going from the hourly time frame to the 15-minute time frame, we can see there was this reversion level right here, price retraced inside of there, and then dropped lower, while the S&P ran the high of London session, completely ignoring that TPD. And yes, I get a lot of questions, or I've got a lot of questions so far, of should you look inside, or once price hits a reversion level, should you look on a lower time frame and look for something to confirm that? You can if you want to, but as long as you know the correct asset to trade, you don't really have to worry about it, because within here at 9:30 was right here, at 9, if you look within here, there was, I believe, there was a TPD right here, And then within here, there was another reversion level that price used to draw price higher. But this is in the time that we usually look for something to form. So as long as time is correct and you have the narrative established, then you're golden. Now, narrative wasn't really too much in play here, so this still was quote unquote low probability just because it was a bank holiday. We've been trending higher, but we formed a TPD and then price formed the SMT. While the NASDAQ created the failure swing, but where did it create the failure swing inside of? That reversion level. So as long as you know the correct asset to choose, you don't have to worry about a second stage inside of that reversion level. But if you want deeper precision, you absolutely can look for something to do. Look for an SMT, look for another TPD, whatever the case may be, to confirm that reversion level. So now we can do some Q&A. The market is giving you a Yelp review. You guys can see it now. You guys can see this stuff is crazy. It actually works. You have something that works, and you can see it. Does the one daily candle between Monday and Tuesday affect the true week open? No. Could you talk about how you would go about trading as a beginner if you were like us? That depends on your personality. Since you're so brand new, you don't know what your weaknesses are yet. And the only way you're going to figure that out is by means of experience and actually going into the marketplace. What my biggest flaw was earlier on, perfection. I could not handle taking a loss. And I went through a period of time to where that was just my biggest issue. So as a new trader, you have to really just figure out what your weaknesses are and build on top of that and build a model or a trade style that allows you to pretty much enhance your weaknesses, because everybody has weaknesses. Everybody feels emotions in trading. It's just developing a style to where it won't send you over the edge. For me, since mine was perfection. And you guys can see now that I have amazing entries. I have great precision. You've seen it. But earlier on, I was trying to get to that point, and I would frustrate myself so many times. So what I had to do is develop a system that would allow me to be not quote unquote perfect, because nobody's going to be perfect in the markets, but accurate, just highly accurate. So my main focus is the weekly range and the daily range. I hate scalping. I absolutely hate it. I'm naturally an impatient person, and it might seem like I'm very patient, whatever, but I had to develop a system that forced me to wait for certain things to play out during the week that would allow me to get the precision that I was looking for. If I go in there and scalp, I know my limitations. If I go in there and scalp, I will do damage to myself, just because that personality trait will come about, and then I'll do things impulsively just because of trying to go in there and scalp the 1 minute chart, the 15-second chart. I hate scalping. Can't do it. The only way I'm able to stay level-headed is the weekly and daily range. So that's why I avoid scalping at all costs. I know it might seem like I'm very patient, but I had to force myself to only trade the weekly and daily range to get the precision I was looking for. If I go in there on the 1 minute chart, I'm going to get frustrated. I hate scalping. I cannot do it. And that's just one of those things you have to learn through experience, because I started on a 1 minute chart. I thought that was the way. But now I look at people trading 1 minute chart, I'm like, I don't get how people do it. But enough about me. I don't know where that rant came from. I really like seeing at the end of the lecture, you say the first thing I look for is a 4 hour 2 a.m. TPD. If not, then a 1 hour. Could you go more into this? What you look for from when you start looking at the market to when your trading window begins? Yeah, so pretty much just like a top-down analysis, That's the same way you go into looking for TPDs, especially if you're trading the daily range. So majority, as we know, majority of the opportunity forms in the morning session. So if we look at that entire morning session and we break it down to what can help us predict that morning session, the 2 a.m. TPD is going to be the highest echelon, because there's a high percent chance that you'll see a daily sequential SMT form that will kick off a morning session run. If that isn't there, then you look for the 1 hour TPD, which can tell you strength or weakness on an asset, as you can see, like what happened right here, which can give you a run in the morning session. So it's just going from top to bottom and just thinking in terms of probability for things that will tip its hand. How can one go about treating the 15-minute time frame as a narrative time frame, the 5-minute time frame as a higher time frame, and 1-minute time frame as a lower time frame for scalping? The same way that I would go about it for the weekly, for monthly cycle, weekly cycle, daily cycle. But with that, because I did get a question about this and somebody asked me why didn't this work out right here, you still want to be in tune with the higher time, especially like the weekly cycle. Always be in tune with the weekly cycle. If you're trading against the weekly cycle, don't hold on to it for too long. So if the 15-minute daily cycle forms, and then or you have your narrative time frame forms, but it's opposing, for your example, the 15-minute time frame, which would be the daily cycle. If a daily cycle bearish sequential SMT forms as your narrative time frame, and then something on the 5-minute or 1-minute confirms that being a true reversal for that cycle, but it's against the weekly range, don't hold on for too long, and don't expect it to be like a monster trade or anything. But you still very well can use it the same way that I'm sharing with you, of how we go into the beginning of every week. We say, okay, price is either going to draw higher or it's going to draw lower. You have that established from your narrative time frame, and then you're working within the parameters of the 90-minute cycle and the micro cycle to actually gauge that direction. Will we have some backtest sections, and can we have a space in Discord to share screen instead of VC only? Yeah, I'll get that sorted out. And one day we can have a backtest session. What month will you explain your logo? I'm waiting to see who can figure it out first. Does it mean the same thing as the formula on your Twitter banner? Yes. How did you overcome the struggle of not accepting a loss? So with that, how many times, and this is just public vote right here, how many times, especially whenever you guys are new, came into the market, took a loss, it wasn't even that big of a loss, went back in, took another loss, maybe used risk management on that second loss, went back in again with more leverage, and then took another loss, and then went back in and pushed and pushed and pushed, and then bam, before you know it, blown account. How many times has that happened to you guys? Exactly, it's happened. It happens to everybody. There isn't a single profitable trader that walks this earth that hasn't had that happen to them. But it's what you learn from it. How are you going to combat that? Because now you've made the mistake. The only important part is learning from that mistake. If you don't change your ways, if you don't become better from it, then you're just going to continue having that same exact thing happen over and over and over again. So you're faced with two decisions. You either, one, change and then become better, or two, you follow in the same mistakes over and over and over again and lead to nothing and just walk in a circle. Those are your two options. And that's just the reality of it. If you continue making those same mistakes over and over again, you're not going to get anywhere. So yes, everybody, that happens to everybody. It's just how long are you going to allow it to happen for? Are you willing to have the discipline that's required to change? Or are you just going to get frustrated and continue making that same mistake over and over again? But how you beat that is from finding the root cause of it. And that comes by means of journaling. That's why the very first video of the core content lecture was proper and effective journaling. Through journaling, you're going to figure out why you feel a certain way. You're going to figure out the reason behind your losses. And while everybody does have a losing trade, everybody's going to eventually take a loss. That's just the reality of it. But you're going to be able to get to the root cause, not only in the charts, but through yourself. And once you understand the root cause of why you make impulsive decisions, or why you do specific things, whether it's something outside of the charts, whether it's family, whether it's friends, whether it's you hate going to work, that's where you find your root cause. And once you understand, okay, this is what's driving me to do a certain thing. Once you understand it, that's whenever you can change or have the ability to change. Because the next time it rolls around, you can be like, okay, the only reason I'm going back in here with way too much fucking leverage is because I just want to get out of my job so bad. It's the only reason I feel this way. If you identify it and you understand the root cause, it's a lot easier to combat that. Now we're getting more into psychology, because I've been getting asked a lot about psychology. So hopefully that aided your psychology lesson. And yes, we'll have a psychology lesson in the core content. And no, for the person asking, did not trade today. I'm just showing you proof of concept that even on low probability days, it's there. That doesn't mean trade it. I'm just outlining it for you. For example, I want to backtest 2015. How can I call that data? What tick should I search at TradingView? If you want to go back and backtest particular data from years ago, type in the contract month. For example, NQH. This is the first 3 months of the year. And then what you were saying, what was it, 2015? You type in 2015. Now, while on TradingView, it doesn't say there are any symbols or anything. If you click enter, it'll take you right to that data. And you can look at it through the scope of the lower time frame. Do you read your journals and reflections after every day and every week? Majority of the time, yes. Do you use Notion for journaling? No. I have a notebook. I have many notebooks. Physically writing things down. Trading is so crazy, it will literally mentally burn you. Yes, but it only mentally burns you if you allow it to. On 6-hour TPDs, you use 90-minute candles to identify reversion levels. We'll get into that. For a TPD to produce a run or be confirmed, does it have to be followed by a lower time frame sequential SMT? Example, 1-hour TPD, 5-minute or 90-minute cycle sequential SMT. Once you get down to the lower time frame, I would say the 1-hour TPDs and below, it's sometimes you'll see it make a run without a sequential SMT. So that's why it's important to, if you do get a reversion level from that 1-hour TPD, example on the 15-minute time frame, you choose the strongest one in the direction that you believe price will draw to. So you don't have to worry about if it will create an SMT or not to confirm it. Because that's what pretty much reversion levels were. It removed the fluff, the need to see a second stage SMT. If it's there, it's there. If it isn't, it isn't. As long as you choose the correct asset, you'll still be in the move regardless. When do you think someone should quit their job? It really depends on their circumstances. But if you have a track record, I would say if you have a year of consistency and you have a good pool of money saved up, then you're good. But trading shouldn't be the only source of income. Because the worst thing you can do is try to trade for money. It sounds contradictory, I know. But if trading is the only source of income you'll have, you'll be a lot more stressed and you'll secondhand guess yourself a lot more, which in turn will give you a worse performance. Even your outlook for the days, you don't take screenshots of the charts and put them in your journals. No, I write everything down. Rarely do I take screenshots. For the one-on-ones, are we going to be screen sharing, right? I feel like this is obvious, which is yeah. And I'll probably after this put out a thing on WAP because it's going to be a first come first serve kind of deal. I'm probably going to do 3 people a day, which there's not that many of you for Q1, but I'll do 3 people a day. You'll have 30 minutes each, and then probably like a month and a half, 2 months, get everybody through. If there's predefined or SMT and a TPD, which asset should we pick for a reversion level? Still the strongest one. If the 8 a.m. candle, you could see a 90-minute SSMT sometimes in TPD part 2. Yes, and that aligns. The 8 a.m. candle is the most predominant because it aligns with the 90-minute cycles. It's so funny to me how people... And there's so many discussions on whether on what I trade. Is he on demo? Is he on live? Is he on a prop? Can't spend my money. Ask that so many times. It's not going to help you become a better trader. And that's why I never answer that question. If I were to show you a $5,000 trade, how is that going to affect your trading? That's why I never talk about money that much, because it doesn't matter. I'm teaching you how to read price, not how to copy my trades. I'm teaching you to be independent. Do you trade the Dow if it's the strongest? No, I never touch the Dow. Strongest asset, 1 up close for candle 2. Yeah, that's one way to look at it. But if you were here for the beginning portion of the live stream, you can now see it with gaps that form. Will the one-on-ones, will they be only one time in the year? Or we can do follow-ups. So like if you want to have another one, we can have that. And you guys are the only people that are going to have that because I'm actually not going to have enough time in the day. Once I bring more people in here, it's going to be impossible to fit all the new people in. So you guys are going to be the only ones. How do we see the monthly and weekly cycle sequential SMT with the TPD and 6-hour TPD confirmation against our higher time frame draw on liquidity? The one that formed right now. If anything, this is low probability, so don't take my word as the gospel or anything for this. But really, what I would like to see, and I'm going to say this one more time, low probability. But I'm right now monitoring to see if the S&P can trade inside of this gap, while the NASDAQ will, on this candle's open, high, low, close, trade within this candlestick's range, leaving this gap unfilled. That's really what I'm monitoring right now. So the S&P comes down here and then trades higher, while the NASDAQ comes down through here and then runs higher. What's the biggest loss you took in a day? Thousands. Thousands of thousands. What is your daily routine? Usually wake up around 5:45 a.m. And then, well, I'm Central Time, so I'll say everything through Eastern Time because that's what we run off of. Usually wake up around 6:45 a.m. and then from that time to about 8, I'm just kind of waking up, getting myself ready. And then from about 8:15 to 10:30ish, that's whenever I'm actually watching the markets, if I choose to look for something to do on that day. And then from there, the rest of the day is just work. Outside of trading that I have. And it's not a job, no. Because I told you guys earlier, this is pretty much main focus. Is it possible to do some of the one-on-ones before 7 p.m. Eastern for the ones that live in the... Yes. So what I'll probably do is some days throughout the week, hold it earlier in the day for Eastern Standard Time, and then some of the days do it later in the day, just so everybody has a fair chance at getting in at a good time. Do you plan to hire a programmer to build an indicator for your concepts? The thing is, and I think I saw another guy talking about, he was trying to make an indicator himself. I mean, if you want to, by all means go for it, but an indicator can't determine narrative. There's always human discretion that comes with these concepts, and that's what you're paying me for, is to cancel out all the things that don't matter and show you what you should focus on. Because reversion levels can be wrong. They form damn near in every single TPD. It's just selecting the correct ones and actually framing a proper way of looking for them. And knowing what direction to go for, things of that nature. An indicator just simply can't do that. If we don't get any one-on-ones with you, then the assistant will take some of the one-on-ones, right? Voice reveal from the assistant. Yeah, he said he's going to hold some as well. If I have to see valid TPDs with an indicator and make it make it easy to visualize during live market, please give rules the same as the latest core concept lecture reversion levels. Yes, everything I've released so far about TPDs, you can just code that and that should be more than enough. But only use that as like a crutch to help you identify it. Based off your experience, what percentage of time did you find a Kraken correlation that triggered a reversal using the Dow. Like I said, it's very discretionary. But you guys already know, I care more about the relation between the S&P and the NASDAQ than I do the Dow. And more times than not, if something forms with the Dow, I just completely ignore it. If the Dow is correspondent with premium and discount, it can be used as long as it's confirmed. But actual percentage, I would say like 35% of the time, a Kraken correlation with the Dow actually works. Which candle would you choose for the 4-hour version level if we have a daily TPD? I believe you're talking about this right here. Which, yes, best case scenario, is we see the S&P. This is best case scenario. We see the S&P drop under this low, and then we see the NASDAQ trade into this wick, and then continuation higher on both assets. So this would be reversion level right here. But this is low probability just because you guys already have the context. Monday and Tuesday, this daily candle is paired together. In the TPD video, you said that if we see a TPD, we should look for an SMT between candle 2 and candle 3. What are the caveats to that? For example, the 4-hour 2 a.m. TPDs last week, 6 a.m. made a failure swing on all assets. Maybe news are factors. Yes, so what I'm teaching you, especially with core content and all that, that is theory. So that is textbook. But as we all know, sometimes textbook is different from what actually happens. And that's why sometimes, like for example, if we go back to the weekly time frame, whenever I said, I believe it was one of these weekly candles was a TPD, I said I want to see this act as a continuation TPD. Things like that, where you just have experience and know, okay, an SMT shouldn't form right here, or an SMT should form right here. It's just one of those things that you'll gauge through experience. But I've said in the past, sometimes a TPD just won't have an SMT. In low probability cases, it'll just run without one. Since we're considered OG, will you give us a discount for next quarter? You guys are going to remain at the same price because what I'm planning on doing is opening it up back in April, but for $200 a month. I think that's pretty fair. So you guys got it cheap. Has Dave made some new concepts? I have no idea. Yeah, so all of you guys, if you paid for quarterly, it'll just be another $300 in April. Or like March 31st or something. I think that's whenever the assistant set it up. Oh my goodness, we've already been here for like 40 minutes. But anyways, hopefully you guys found this one insightful. I will speak with you all again Tuesday night in the pre-recorded lecture, and then we'll have our Wednesday live stream as usual. So with that being said, good luck and good trading.